Hello, everyone. This is Will Smith here. Just want to jump on here to do another training, Forex Bootcamp training. Today is Saturday. I normally do them at 12 o'clock Eastern Standard Time. I do it live and then I post it up on my YouTube channel, and then you guys get to watch it, watch the recording, and then I also send it out to my students, people who are I'm mentoring. I share this video with them as well so they can get pointers, ideas, strategies. They can take notes, they can rewatch the video, they can share it with their colleagues, their friends, and they can implement what they learn. Now, there's a lot of people out there, of course, teaching how to trade the Forex market, teaching how to trade the stock market, teaching how to trade the crypto market. So you just got to find your mentor, and you got to pretty much follow in the footsteps of the mentor. You have to create a trading plan for yourself, and you have to be skilled. Over time, you get skilled, of course, but at the same time, you want to make sure that you have a notebook, right? Keep copious notes and rewatch your, read your notes over and over and over, and also rewatch any training videos that you watch, because you always get a second perspective when you watch a video twice, three times, four times, five times, so on and so forth. That's what I do. So I recommend that you do the same thing. So what I want to do is just share my screen here real quick and show you my website. Now, if you're new and you never traded before, there's a couple of things you're going to need. If you're already a trader and you're looking for pointers, you've come to the right video. So I'll share a couple of strategies, a couple of points that you need to focus on to help you become an effective and profitable trader. Okay. This is my website. This is metrofxtraders.com. This is a landing page, and there's a lot of different buttons here that you can click to go to different things that I recommend. Um, First and foremost, you're going to need a recommended broker. I recommend three here. You just click here, and the first broker that you see here is KOT Forex. They're a really good platform, but my favorite platform, I think it's Trade. Yes, I use them more than any others. So you go here, create your account, and this is where you can create a demo account. You can create a live account. Demo account is fake money, of course. You want to practice with fake money before you actually start a live account with real money. And I don't want you to trade real money until you have practiced for a couple weeks, couple months, and you have a trading plan in place that you can follow. Because without a trading plan, without a roadmap, you're gonna fail. Okay, and that's really, really important that you understand the style of trading you want to be. That you write down your goals, right, and why you're going after what you're going after as far as your dreams. Write that down, make all that crystal clear. Maybe create a dream board, get a notebook, write down your goals, um, write down your dreams, because your goals are your separate soul to getting your dreams. That's important. You need to know, you need to learn what to do day by day, hour by hour, minute by minute before you can actually hit your dream. Okay, so those are your goals. So Haggle Trade is one of the platforms that I use. They're really good. They pay out. You actually earn money, profit in your trading account. They pay out, and I haven't had any complaints that I've heard of on my end. Plus, with people that I recommend that actually create an account with Haggle Trade. So I would definitely, create a demo account with Haggle Trade. It's the number one platform that I would recommend. And of course, do your due diligence before you sign up for anything. Um, but yeah, that's Haggle Trade. So go back to the site here. The next thing you're going to need is a charting platform. I recommend that you create a free account with TradingView. This is where you're going to learn how to be a technical analysis. Okay, so they give you options of paid, options of paid member. They give you more things that you can actually have access to, but you could just create a free account. I'm already a member, so it's not giving me a button to create a free account. But when you actually come here, there'll be a button here to say, hey, create a free account. And create a free account. If you want to upgrade, you can always upgrade later. But once you create your free account, you're going to go to Supercharts. Okay, and this is where you land on the charting. Okay, this is charting is about analyzing the market based on what you see on the chart. Now, there's Technical analysis is pretty much charting, and then there's fundamental analysis. Fundamental analysis is analyzing the news, broadcast, things that is happening in the pair's economy. Um, as far as your favorite pair or indice that you're looking to actually trade into, I normally trade 3 to 4 pairs. NAS 100 is an indice. There's 100 stocks within a group that actually go up and down throughout the day, and it's called NAS 100. And I also trade Bitcoin, which is a cryptocurrency. You could come here on the right hand side by clicking this button and create your watch list. Okay, so I usually use NAS, okay, and GBP USD, Bitcoin, and also gold. Okay, all the others, I don't really trade them, so I'm probably going to delete them off my watch list and just keep the ones that I like, because the ones that I like are the ones that I follow and I trade, so I get an understanding what's going on in that currency pair or that indice. Okay, so and then I put this here because these are stocks. Okay, New York City stocks based on the New York Stock Exchange. I follow these as indicators to let me know, okay, is Tesla doing good, or is Amazon doing good, is Netflix doing good? Because when Tesla's down, NAS is down. When Tesla's up, NAS is up. So it's like a correlation kind of thing there. And then with the dollar index, I keep this on here to help me monitor gold, because whenever dollar is up, gold is down. Whenever the dollar is down, gold is up. It's like a reverse reaction there. And then US 30, I don't really trade US 30s, so I'll take them off. QQQ, I don't trade them as well, so I'm gonna take them off. So this is my watch list. NAS, okay, I trade NAS, I trade Bitcoin, I trade gold, and I trade GBP USD. Okay, those are my favorite pairs. So when you come to your favorite pair, this pops up. This gives you like a chart of what's going on in that currency pair. Okay. So when we talk about currency, we talk about the money that the country is using. Okay. Um, Euro dollars, British pounds, things of that nature. So this is British pound, GBP, and it's going against dollar, US dollar. Okay. So you have your blue candles here, and you have your black candles here. The blue candles are pretty much are candles that are bullish, meaning they go up. Okay. And then the black candles are bearish, meaning they go down. So whenever you see a blue candle trade higher, you're looking at an uptrend. Whenever you see a black candle trading lower, you're looking at a downtrend. So the very first thing you want to do, we're mapping out a strategy for yourself, starting at the higher time frame. Normally, I try to trade the high time frames. Um, well, I watch the high time frames, but place my trades on the lower time. By watching and placing my structuring my plan on the higher time frame, I try to ask myself a couple questions. Number one, what's the trend? Is it an uptrend, downtrend? Kind of understand the structure of the market and see if it's going higher, high or lower, low. And then within that parameter, I scale down to the lower time frames to see if I can find a good entry based on what the questions I ask myself on higher time frames. So basically, the very first question that I ask myself on the higher time frame is what trend am I in? What trend is the market in? Is the market trending higher, meaning the currency pair is going higher, making higher highs, or is the currency pair going lower, making lower lows? Okay, because I'm looking for a trend, because there's two types of trends, and I'll graph it out here for you guys real quick. This is pretty much for beginners. I know if you guys are intermediate traders, you already know this, but I want to grab this tool over here called Path Tool. Matter of fact, I want to make that one of my favorites right here. So whenever you click on that star, you create this bar of your favorite pair of your favorite tools. So uptrend. Let me erase that real quick. So it's like this. Oops. Lock it. Okay. And this is an uptrend. Okay. So what happens is you have higher highs, right? This high is higher than this high, this high, higher than this high, this higher than this high, this high is higher than this high. You have higher highs going up. Then you got, a low here, but then you have a lower high, a lower high, a lower high, a lower high, which means these lows are higher than the lows before. Okay, and now therefore you have an uptrend. This is considered an uptrend. Okay, now in an uptrend, you want to purchase or buy or get into the market based on the retracements. When I say retracements, I'm talking about this right here. The pullbacks. You want to enter the trade on the pullbacks. Okay. Whenever you see a pullback, you want to try to enter the trade. Okay, because this is where you're buying low to sell high. Okay, you get out of the highs, you get in on the lows. Okay. I see a lot of people trying to get into the market right here. It doesn't make sense because if it pulls back, you're in the red. You're not making any money. Okay, and then you gotta wait. You don't know how far back this is gonna be a pullback. Because if this pulls back and breaks the low here, the structure may change into a downtrend. You don't want to get into a trade on the peak of the highs. So you want to try to avoid that as much as you can. Just be patient and wait for a pullback, and that way you can get into the market on the pullbacks. Okay. Now that's important. So let me go ahead and erase that. Okay. Now for a downtrend, you're looking at a downtrend on this on the chart where you have lower lows and lower highs. Okay, so this is a lower low. This low is lower than this low. This low is lower than this two lows. This low is lower than all these lows here. And this is all the lows. Then you have a pullback, right? These are considered pullbacks, where this is a lower high, or lower high, lower high, lower high, lower high. So these lows are higher than the previous lows. I mean, lower than lows before it, but yet it's trending lower. Okay, so you want to make sure that when you see a pattern like this or structure happening like this, you know that it's a downtrend. So this is considered a downtrend. All right, and this is considered an uptrend. Okay, and typically you put your trend line. This is considered a trend line on the bottom of your trend. That way, you try to have your retracements or the pullbacks hit the trend line. Okay, because once you do that, you know that you're in an uptrend. And if it violates or breaks your line, it might be a market structure shift in the trend. So you got to pay very close attention to that. So this is your trend line here. Okay, and you can also create channels, but I'm not going to get into the channels and so on and so forth. But this is an uptrend. This is a downtrend. It's that's the first thing you need to understand. So when you're looking at the chart, you're gonna come here on the higher time frames. Let's say on the monthly time frame, and you just try to say to yourself, okay, did the market make any higher highs? And if you look left, you see the market was high here. You could say to yourself, okay, this was an uptrend because I understand that it started down here and it went all the way up here. This is how you put your trend line, right? All right, so that's a trend line. All right. Now, since you have a trend line and it violated the trend line here, you have a market structure shift. Okay. Because the last low here, the previous low here, was pretty much violated by these black candles here. Okay. So, you know, by seeing that, you can say to yourself, okay, the structure of the market has changed and it's going lower. Okay. The other thing you got to keep in mind is consolidation. Consolidation is when the market is going sideways. Okay, so when the market's going sideways and not making any higher highs, not making any lower lows, it's just trending sideways. Okay, what you want to do is try to avoid that as much as you can, because nothing really happens in this sideways motion here. Um, the market hasn't decided what it wants to do as far as whether it continues uptrend or continues downtrend. So you want to create a box, and then you have to wait for a breakout. This is considered a breakout. A breakout rule of never enter a trade on a breakout when it first breaks out. What you want to do is wait for it to come back to hit the box. And I'm going to show you what I mean. In a breakout, okay, notice how these two black candles right here came out of the box, right? Okay, so most people say, okay, it's breaking out. I'll get into the trade right here. No, you don't want to do that because you don't know if it's going to pull back, and it did pull back. You don't know how far this pullback is going to be. It did pull back inside the box. So what you want to wait for is, yes, a retracement, a pullback, okay, but you also want to read the candles. You want to understand what candles are happening in this area when you jump in the trade. So it did pull back, but it gave you this start right here, this morning start right here. Then it gave you a bearish engulfing candle. Okay. Now, once you see a bearish engulfing candle, okay, what you want to do is wait for this candle to close right before jumping in. And at the close of this candle is when you jump in. You set your stop losses above, above the candle, and you said you take profit like a 1 to 2 or 1 to 3. Okay. So that's where you would enter the trade right there, and then you take this other tool out here, which is your short position. If you enter the trade at the close of this candle, up here for your stop loss, this is to protect your account. This is what I do. Then you pull this out like a 1 to 3. See if you can get like a 1 to 2 or 1 to 3. These are ratios. Okay, and just wait for it. Just look right to see if it'll ever come down to this area. Okay. So you got a long way to go. I mean, right here was close. So when you see this wick here, could cashed out or a 1.6 right there. Okay. But you're pretty much set for the trade if you're placing the trade on the monthly. But this is the monthly is pretty much you want to see the market direction, right? But this is what I normally do when I place a trade. I enter the trade and place a trade on the 15-minute or the 5-minute chart. Okay. I just want to give you an example, right? So let's erase all this. So we know that it was trending sideways, okay, but we also know that once it broke this trend line right here, it's a downward trend. So we put an arrow, okay, from the top to the bottom. This trend line starts all the way up here, right when you get this break in this area right here. You put the trend line on top, and now you have a downtrend. So all you really need to be looking for are sales in the downtrend, okay? Because in order for this to be an uptrend, it's got to violate these highs right here. Okay, it's got to surpass this area right here. So you can put that line there and say, hey, if the market ever gets to that area, okay, it's gonna make higher highs, but it may take some time to get there because this is a monthly chart. Okay, so we're gonna go down to the lower time frames. Here's all of this. Okay, so we have our trend line. We'll make it really thick, and we know that it's a downtrend, right? So this already happened, so we'll go ahead and erase all of this. Okay. And we can also create key areas. I'm going to show you how to create key areas as well. But let's go down to the weekly. Okay. So you could actually try to focus on this trend line right here. If anything breaks above the trend line, you might want to consider placing buy orders, okay, because the market down here is trending higher, okay, or you wait for it to hit the trend line. If you find yourself, seeing a bearish engulfing candle, you might want to get in for lower lows, okay, going forward. Okay, so remember, it's a downtrend, but this is all considered a retracement. This is like a pullback. Like I said, you want to enter on the pullbacks. Okay, so if it hits the trend line here and breaks it, you might want to consider it being bullish. But if it doesn't break the line and it bounces off the line, you might want to consider it being bearish. So it's a couple of things you're going to wait for. Okay. So this is the weekly. The weekly is a retracement, as you can see, it's pulling back. It's giving you retracement vibes because right here, from here, it's all pretty much an uptrend, right? But look, it violated the trend line, and now it's pretty much going back to the previous trend line where we have it. Might be going on a little bit lower. So that's another thing to look at. The trend lines are really important to tell the direction of the market as well. Let's go down to the 4 hour to see what we can see here in the 4 hour. Typically in the 4 hour, I like to put my support and resistance levels, meaning I'm looking at the chart and I'm looking at, okay, what was a high, what was a low. I'm placing it on a line, which is this horizontal line on the highs, most previous high, and then the horizontal line on the most previous low. Okay. So right here, I got my high, which is my resistance, which is the ceiling. I got my low, which is my support. Okay. So within these two lines, I'm looking for trades. Okay. So basically, I see that the market was pretty much on a downtrend right here, and then it pulled up to a level. Okay. That's telling me that, hey, what I need to pay attention to is what's going on in this area here, because when it pulled up, okay, another tool you can use, it'll tell you what's going on. It's called the Fibonacci tool. This tool you want to master because this will pretty much give you an indication what's going on. So with the tool, you take it from the top and pull it all the way to the bottom, okay, and it tells you exactly what's going on in this market. Okay, typically a retracement would be anywhere from it's 0.618, okay, or 0.75. As you can see, we're surpassing both of those areas. Okay, so if it goes beyond the one right here, then you might want to look at buys because it's going to probably create this resistance line will probably become a support line. But if it bounces off resistance line, it makes lower lows, then you want to pay attention to that as well. So the market has levels, and these levels will either be respected or violated. And then when that happens, you want to place your trade according to those levels as well. So this is pretty much a resistance level, and I'm going to make it red. Actually, I make it black to remind me that it's the ceiling. And then this is the support level. I'm going to make that red so I can see it. So I'm going to go into lower time frame to see what's going on in this area. Okay. And this is pretty much just called a top-down analysis. So you're going to go to the 1 hour, right? In the 1 hour, what do you see? You see a high here. It did hit your resistance levels a couple of times. Let's see, bounce off the resistance levels and started journey downward. And then it hit your support level and bounce off the support level and trend it higher. So between those areas, I mean, there's a couple of key candles that you need to focus on when you get to your support and resistance levels. So that's why I recommend you read the Candlestick Bible book, because in a support level, if you're patient enough to wait for the market to come down to these areas, you know that this is a doji, and with the doji is a reversal. And then right after the doji, there's a bullish engulfing, which is bigger than the doji. And then you wait for this candle to close and place a trade here to ride it back up to resistance. Okay, you put your stop loss down here, and pull out your tool, your ratio tool, and see, okay. One trick that I'll share with you, the last candle before the upswing is a candle that you want to pay close attention to. This candle right here, this black candle right here. Okay, I'm going to put a marker on it, the top, the bottom, and then I'll pull it to the right. Okay. And because the reason I'm doing that is because I'm looking for my demand level. Okay, supply and demand. This is where the market started changing, right? So whenever you have a demand level, okay, and the market starts to trend higher, it needs to come back and touch the demand level, or even a fair value gap, because the fair value gap is really, really important. Now, what is a fair value gap? I talked about that in my previous videos. A fair value gap is when two candles, blue candles, don't meet. So here is a fair value gap. Over here, this wick and this bottom of this candle is considered a fair value gap. So you can draw a fair value gap and anticipate the market to come back to fill the gap because of some orders that the market didn't fill before continuing higher. So that's your fair value gap. So you have your demand level, demand zone, then you have your fair value gap. And as you can see, what happens is the market trended higher, came back and filled the gap, right? And started trending higher again, so on and so forth. But look at that. It continues to give you indications. It may come back more than once, so you got to keep in mind of that as well. But excuse me, whenever it does come back more than once, this is where we really want to get into the market and try to ride it right back up to resistance. Okay, because right here, if you would have got in over here on this bullish engulfing candle right here, you probably would have just got. Let me pull up my ratio here real quick. At the close of this candle, right? And make this your stop loss down here, right below the support line. Pull this out. Probably only would have got like, well, if you were to stretch it out to a 1 to 3, or right back to resistance, all of that's up to you. But 1 to 3 is typically what I aim for. Okay, so if you did a 1 to 3, you would have hit your take profit over here before it got over to the resistance levels. Okay, so that's an easy strategy to comprehend. You create your support and resistance levels. And where did I create my support and resistance levels? I created it on the 4-hour. Okay, what's the support? Let me erase everything again. Just to show you this again. What is my support and resistance levels? Well, it's the most recent high on the 4-hour, which is right here. There's a high here, so you want to do the most recent high, and then you want to do the most recent low, right there. And you want to try to trade within these two levels. Okay, these two colors here. I want to make the resistance level right there down on your notes. I'm going to make it black. You can make it blue, it's up to you, but I'll make it black to remind myself that that's the resistance level. This is the support level. And I'm going to probably be looking for trades in this area because every one of these candles are 4 hours in duration. Okay, so but I want to scale down to the 1 hour, the 30-minute, and then the 15-minute, the 5-minute, because I'm not going to wait 4 hours. I'm not, I don't want to wait 4 hours to put in a trade. That would be ideal, right? That's considered more like a swing trader. I'm more like an intraday trader or a scalper. So I want to come down here to these lower time frames to see what I can find within the support resistance levels. Because if I'm looking for a trade, based on my trading plan, I'm looking for key areas, right? I'm looking for key areas. So let's plot out some key areas on the 1 hour. Okay, let's plot out some key areas. Now, a key area on the 1 hour is where the market actually touches more than once. Okay, so you look left and you have a key area here. Let me make this color here. So we got multiple touches on this key area, right? So this is where the market will come to and test this area and either bounce off of it like it did here or bounce below it like it did here. Okay, so that's the key area. So I'm going to pay close attention to that key area. But then I have another key area right below here. There's a lot of multiple touches here. Okay, so I gotta focus on these two key areas because this, hey, market was over here, touched the key area, bounced up, then came back, touched it again, bounced up, and then trended higher. Then it came over here, touched the key area, went lower, then came back and touched the key area and went higher. So these are the two key areas that I'm going to pay close attention to. Okay, now, so we have our resistance levels here, we have our support levels here, and then we're going to go down to some more lower, lower levels. Okay, we want to look at the 15-minute. Okay, and we want to pretty much stay focused within support resistance. Right, stay focused within support resistance. We want to come down here and find our demand zone. Right. Remember what I said on the support. Right. You go to the most recent candle before the reversal, which is that doji right there, right? So you're gonna mark that out right there. And we're on the 15-minute, right? Mark that out from wick to wick, stretch it all the way out to the current time. Do that by going to this to extend to the right. Okay, so this is the um, this is the zone that I want to focus on. And then on the top, I want to focus on my supply zone as well. Let's see that right here. Before this huge candle was developed, you see this doji right there, a shooting star, however way you look at it. So I'm going to put from wick to wick another zone. Okay. And then within this zone, what am I looking for? Okay, well, first off, I already know based on the high time frames that it's a retracement. It's a pullback because the overall trend is a downtrend, right? So if this is a pullback, I can take trades within the pullback. Well, I'm more excited about it coming back down this direction to make a low low, so I can write the trend going down, right? So I'd wait for it to hit resistance, see if I can find myself a bearish engulfing candle, get in, um, going down. Okay, but let's say you're looking for buys in this retracement. So let me find you a key area that would help you. I want to show you something. Okay, so we're going to go back to finding that fair value gap over here. Okay, so I'm going to simulate this trade by doing a replay. And I'm going to start right here. All right, so this is the 15-minute, right? I'm going to push play. All right. Okay, so I push play. What happened? I see this doji, which is a reversal indicating candle. It's telling me that's going to reverse. Okay. Now I see this candle. I already know that I see this candle. It didn't break my support level, so it didn't make a lower low. So I'm anticipating a change in structure, a market, a break of structure, right? All right. So a change of structure. So I see this doji candle here. Then I see a couple of candles trending higher, right? Now I want to set my fair value gap. The fair value gap, again, it's this candle here. I'm trying to find it. This candle, that candle. Okay. And we'll make that a different color. So what I want to do is wait for the market to come back and fill the gap before I place a trade. So let's push continue with the play button here. Okay, so I'm gonna stop it there because what I want you to pay attention to is remember over here, right? The market came up and it came back down. Okay, it didn't make a lower low. So I would take this tool here, point this out straight out right here. Okay, and what happened here is these candles are now higher than the candles over here. Okay, so this is now a change in character. Okay, so I'm going to label it as such, call it a change of character. All right, so because now it's no longer creating lower lows, it's creating higher highs, as you can see from this pattern right here. Okay, so when that happens, you already know there's got to be a tracement to come back to fill the gap before it continues turning higher. Because whenever you see these big candles right here, these institutional traders getting into the market, okay, but a couple of people got left behind, so it's got to come back and fill the remaining orders before it goes higher. Okay. So yeah, I located, you know, the areas that I need to focus on, but at the same time, I'm patient enough to wait for the retracement to come in here, right, and wait for this bearish engulfing candle. Sorry, bullish engulfing candle. I won't say that wrong. This bullish engulfing candle right here. This bullish engulfing candle right here, and that's where I went into the trade, right on that candle for a long position. At the end of the trade, placing my trade there, I'm stretching out my stop loss there, and I'm stretching this out for like a 1 to 3. Okay. All right, so that's 1 to 3. There we go. That's a 1 to 3. All right, so we're gonna push play and bam, big profit has been hit. Big profit is right here, and it was hit by this candle, this previous candle, this candle right here with this wick. If it went ahead and profit you up for a 1 to 3. So if you were to invest, I don't know, $10, you would have made $30. 1 to 3, $100, you would have made $300. $1,000, you would have made $3,000. So that's a 1 to 3. Okay. So rewind the tape, rewind the video, because what I just shared with you should be part of your trading plan. Okay. Should be part of your trading plan. All right. Because you have to be patient enough to know that the market needs to come back before you place orders anywhere over here. Okay. Yeah, you could have made some money, but you want to wait for the big moves. Okay. All of this right here. You want to wait for the big moves. You want to wait for that 1 to 3 to hit. Okay. Because if you would have got in over here, you would have been in drawdown. Okay. You've been in red. Then you were like, oh my goodness, I'm going to close out this trade because I don't like to see red. But if you're patient, you can endure the red because you don't lose any money until you sold out. So you close the trade. So, but you got in over here on the bullish engulfing candle. Train your eye to, you know, train your eye to find bullish engulfing candles. Train your eye to do that. It's really important. Bullish engulfing candles are the most important candles to look for before you place a trade. Okay. And I'm going to show you where they are. This is a bullish engulfing candle. Okay. This is a bullish engulfing candle. All right. This is a bullish engulfing candle. Point them out to yourself. Here's another bullshit golden candle. Find them on your chart. Back test, back test, back test. Look left to see if you can find those bullshit golden candles. Typically at the bottom of a trend. Right? Typically at the bottom of the trend. If you can find it during the bottom of the trend, that's where you want to pay attention to. That's where you want to place your trade. Not on the top of the trend, or on the bottom of the trend. Okay. On the change of characters, you see that. Okay, so hopefully that was helpful. Hopefully you got a lot of value out of that. That's important. Now I'm going to continue to push play just to show you how this pans out. And this comes with the paid version of trading. If you're a paid subscriber and a member, you can actually use this replay tool so you can identify these areas when they happen. When you see it in the past, you'll see it in the future because the market always repeats itself. It does the same exact thing day in and day out. You just got to understand the patterns. Once you understand the patterns, great things can happen. Not only for you, but for your wallet. You fatten up that wallet. All right. So I'm going to continue to play. And we're just going to see. Remember, this is our resistance line, right? We could have got 1 to 3 here. We're going to re-enter it over here, right? Right all the way up. Okay. What we're really looking for, excuse me, what we're really waiting for is for the market to come back to this area up here. And sure enough, it did come up into right? And did you guys see that market structure shift? Did you see that market structure shift? Where is it? Okay, pause the video. Tell me where you saw the market structure shift. The change of character. Okay, it was right here. All right, so you take this tool. It's lower than these candles here. See that? Again. Such change of character. Okay, and then right here to here, you have a break of structure, a continuation. All right, so it changed characters here because it didn't make a higher high. And this candle right here, so it's 2 candles right here. Okay, gravestones. Gravestones are reversal candles. We only got 1, but we got 2. All right, we got 2 gravestones. It's some of them, hey, knock knock. I'm gonna reverse the candles on you guys. Be prepared for it. Okay. So you got to change the character there. And you got a break of structure here, which is giving you a huge change going back in your direction. Okay. And what did I say to do when you actually get, I'm gonna erase this because this is I'm sure something. I said mark the last candle that created the change right here. And what did it do? It came back and hit that area. Gave you another doji. Okay, and then bounced off that area. Okay. Now, here's another one right here. Well, we gotta look for the fair value gap, right? Fair value gap is right here. Between this candle and this candle. 2 wicks that need created this little area right here. Right? And what does the market have to do? It has to come back and fill that gap. Okay. If you know what you're looking for, you can take your trades according to what you see. Came back to fill the gap, the area right in the middle. 50% of that candle is filled. Okay. And then now it's bouncing off. Right. So we may see next week, we may see this market trending back lower. Okay. Because it's technically a downtrend. All this stuff that we saw on the left was a retracement. And you can place trades on a retracement, on a reversal. But you really want to ride the downtrend down to its lowest lows. Because if it's a downtrend, it needs to make a lower low. And that lower low is a lot of pips. So if we go back to the monthly, okay, see the lower low right here. If the market trends lower than this, you could write that all the way down. Okay, you can write it all the way down. It's not going to be a straight line. It's going to be some pullbacks. It's going to do all this stuff. But if it makes a lower low, lower than these candles, okay, then you would profit all the way down. Okay. Now, I'm not saying it's going to happen because the market has its own its own brain. It may do this, it may not do this. It may just say, you know what, I don't want to make a long low. Because the economy of the country, of the British pound, the economy could be booming. GDP, gross national product, okay, could increase. They could have more imports and exports. They could lower taxes. They could increase taxes. Inflation may be high. Inflation may be low. All those are factored within fundamental analysis that you need to focus on as well. Because if the market's really good in their country, that means the dollar's going to be really good, right? It may go higher. Okay, so market only has two ways to go: up, down, sideways. Stay away from the sideways. Capitalize on the uptrends. Capitalize on the downtrends. Okay. So, yeah, that's pretty much what I do. Hopefully, you guys get some value. If you've got questions, put them in the comments area. But start with the top-down analysis and try to place your trades according to what you see. Okay. So, yeah, that's what I do. There's a couple of tools that I'm going to be talking about in the near future. I want you guys to do your homework on. Okay, and one of the tools. All this was a retracement, but yeah, it's an uptrend. Okay, one of the tools I'm going to share with you, maybe next week or next week's training, is this tool right here. And it's pretty much, it's called the pitch fan. Put it on the bottom, put it on the top, and you fan it out. Okay. And you aim for, the middle red line right here for the market to come back to. All right. It's pretty nice. Because it did come back to it, right? Because it was a high, you get a little pullback, then back down to the red area. And it went past the red area. And that's the pitchfork. Pitch fan, when I say pitchfork, pitch fan. It's a tool that you should practice using. It's a really good tool. Let's see. All right, so it's a really good tool to use. And of course, this tool right here, where is it? Trend-based fib extension. Okay, because whenever you have a pullback, you take it from the bottom to the top, and if it's continuing its uptrend, you want to aim for this area right here. That's where you would want to put your TP. Okay, because we want to try to get into trade down in this zone, right? Of course. So you want to look for a couple of key candles, and then you want to try to aim for this area right here And that would be, let's do a long, a long tool here. What's right below. And this would be like a, that's pretty nice. Be like a, depending on your stop loss, a 1 to 8, a 1 to 9, or 1 to 10. Okay. You just gotta wait for it. You're gonna get indications that it's gonna go in that direction. You gotta use your influences and so on and so forth. That's important because it might trend lower. You just don't know. Because right now it's probably just, it's trending higher here, but it needs to fill those zone, those gaps. Okay. And if I was to erase this, do you see a fair value gap? It's right here. And again, it hit the fair value gap. It might be bouncing off, but again, it might just go higher as well. So it all depends on, with these candles, how you read the candles. All right. So make sure you read that book. All right. Thank you. Thank you for spending your day with me, watching the video. If you like the video, give it a thumbs up. Subscribe to the channel if you want more videos like this. And make sure you put the notifications, hit the notification button. That way you get notifications when I do a video. When I probably try to do more than one video, not just one a week, but more throughout the week as well. So you can actually get more value out of my channel. And yeah, I'm gonna probably try to do some vlogging as well. I want to, buy a camera and just vlog, and so that way you guys get to learn a little bit more about me. Okay, a 58-year-old retiree, trade full time at home during the New York session. That's at 9:30 to about 11 a.m. And then I trade again from 2 o'clock to about 4 o'clock the same day, Monday through Friday. And I train, I teach, I educate, I encourage, and I share not only my strategy, but I also take pointers and ideas from other traders as well. Some of the top traders that I follow um, are online, and they're killing it. And I get a lot of value from watching them, and I try to incorporate what I learned from them into my trading plan. But again, a trading plan is a very important tool that you'll need to create. That way you don't violate any rules. You got to set some rules within your trading plan that you can adhere to. Okay. You don't want to jump into the market just to be jumping into the market, just like you don't want to jump into a pool without knowing the depth of where you're jumping into. Are you jumping into shallow water, or are you jumping into the deep? You have to measure things before you actually take action. And you also, if you're a surfer, you want to make sure you ride the wave, right? Okay. You want to paddle out to a key area that you know that the wave will get to, and then you reverse your paddle or reverse your surfboard. Okay. And then once you see the wave start to come, you're paddling really fast. You jump on top of your surfboard, and then you let the wave carry you to your destination, which is the beach area. And that's how you want to think about trading. You want to catch a wave, okay, and then you want to ride the wave. And once you do that, there's no reason why you can't be profitable when trading the markets. Okay, it's really important to understand that analogy and then apply that analogy to the trading markets, because that's really important. All right, people, thanks so much for watching the video. You guys are awesome. You can do this. Believe in yourself. We'll talk about psychology and stuff like that in the videos. That way you can build that mental belief in yourself, because if you don't believe in yourself, nobody will. Don't think this is hard. Think it. What you say to yourself will determine how far you progress in this journey. Okay. Never defeat yourself by saying negative words. Always promote yourself by saying positive words, because once you start doing that, okay, great things can happen. It's like problem solving. If you're trying to solve a problem, the mind will find ways to solve it, versus if you're trying to defeat something, you're going against what your belief is going to find a solution for you as well. So think positive, think, great things can happen for you. This is a journey. It can take 1, 2, 3, 4, 5, 6, 7, 8 years, but it's a journey. You only quit is when you give up. Okay, you may fail every now and again, but don't quit. It's when you truly fail is when you quit. Okay, try again. Perfect practice makes perfect. Okay, and then once you get this down, you can write your own paycheck. Okay, you won't have to work for somebody else anymore. You can live the lifestyle you ever always wanted to live. You could, pay down your debt, get out of debt free, and you could help family members as well, friends, neighbors, whoever you want to help with your finances, help them with their finances. You'll be able to help people along the way. Because there's a saying that says, if you teach a man how to fish or a woman, you feed them for a lifetime. Okay. Just don't give money away. Teach them how to fish. And once they learn how to fish, there's no reason why they can't go into the pond, put the right bait in, right hook, right fishing pole, and get their meal. Because we all want to eat, right? You want to eat, I want to eat. Let's all eat together. All right. Thanks for listening, everybody. You guys have a great one. Thank you. See you next week or, throughout the week. Have a great, successful trading week. Take care. Bye bye.